Hey everyone, Double P here and welcome. So in today's trading session, I decided to switch it up and go attack good old Microsoft. So let's kind of get into it. First of all, you see here, real account, so real-time data. Been going through this for the last, I don't know, three years now, 3.5 years. Stock is in real time, Amex, New York Stock Exchange, NASDAQ, equity options, real time, futures options, all real time, Forex, real time, other, real time live account. So let's get into why I attacked Microsoft. First of all, let's come over here, and if you don't know, what we always do is we always draw the box, right? So when we draw the box, we know exactly what's going on. So from 227, so where are we here? At 227, right around here. Let's walk through the progression, first of all. And I'll just draw the box really quickly here so that you see it. So 227, where are we here? Let's go to here, 231. And we go to 945. Let me activate the drawing. Okay, so there's our box. All right. Now, what do we do when the stock opens up inside of the box? We leave it alone. We either take a defined risk trade, like we can do a spread on this, or we leave it until it breaks under the box, and then we're going to go short. If it breaks above the box, we are going long. Those are supposed to be my arrows, kind of crappy, whatever. So I just waited, right? See the progression here. See the escalator to the downside. This is exactly what I was looking for. Why did I attack Microsoft? Well, let's come over here and you'll see it, all right? Microsoft got downgraded today, right now. So that was a pretty heavy downgrade on Microsoft, because Microsoft's literally one of those bellwether type of positions, right? It's steadfast and true. But now it's 2023, and all these stocks that were holding up like Microsoft, it now is going to get punished, right? So where's the news on it, you might ask? Well, we don't need to see the news on it. We just need to know that it's getting punished. So I just waited, right? Let me get rid of that. And I'm also looking over at the ES here. I'm looking at the wild swings on it. And I'm also looking at the SPX as usual. Still in this. So that's why I decided to take the trade. I also decided to take the trade because you see right here, the 200 is red. You see the slope of the 200 is pushing down. This is volatility. What is the box? The box is volatility. The box is price action. The box is support and resistance. The box is volume, right? All that is combined in the box, and it shows you exactly what's going on. So let's come over here. You can see my order fill. I'm just going to pop over here real quick. You'll see exactly when I bought it, right? 958, entered into my trade, 50 contracts, 167. I sent it out to you for 165. You see obviously what I made there today, 7,000 on the day, right? And you see when I sold it, 1013, that's all I need, right? I need a 15-minute window to trade, and that's it. That's what we do, right? That's what I do, right? So 958. Let's come over here to 958. I don't need to take a long-standing position right here. This is off of a dip, right? You'll see the little bit of a rip here. Then this is low-level consolidation because these were hitting the lows. So right in this area right here, you'll see that's when 958, that's when I took that position right there on that particular candle. Let me open this up a little bit more so that you can see it. All right. So now you'll see 958, that candle right there. This is a spinning top, classic spinning top. This is another spinning top, right? This is a hammer right here. This is supposed to be a bullish hammer, right? This is a inverted bullish hammer right here. But you see the movement right there. I always look at the last 3 candles because that's my progression to see what's going on with the position. And this right here is just bullish, neutral, neutral, pause, 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 neutral or pause, right? And then you see the 20 right here. It was green. You see it right here. Then all of a sudden the 20 turned yellow. And what that told me was, all right, now it's time to take a position. You see the lower volatility band tightening up right here. So this is a wide state of this volatility bands, right? And then you see this is a narrow state, right? The volatility band and the top band and the bottom band are converging together. This is a pause sequence going from a low, and then we get this nice candle configuration right here. This is a gravestone doji right there, which is basically bearish from this configuration right here. Then we get that massive drop off and that massive sell off. And then you see when I got out, when did I get out here? 1013. Is that right? 1013. Let me come back over here and look at that trade. Let me come back to my work. And you see, this is all real time, right? 1013, right? I mean, who else is going to show you this kind of stuff? Nobody, right? Who else is going to show you this kind of stuff on YouTube or social media? Nobody. They all hide. 1013. So right there. I always tell you to get out on the low. See the low right there? Because there's always a reversal. 99%, well, let me rephrase that. About 92 to about 95% of the time when a position hits the low like that, you can see the escalator pattern right down here. You see the low, it's going to bounce, right? This is a solid sell side candle right here. That's where it closed right there. Then you see the bullish reversal. There's always going to be a reversal when it hits the low like that. Even though the 200 is pushing down, because now we're in a wide state. The volatility bands are in a wide state. So when the volatility bands are in a wide state, this is expansion, right? So depending on what happens, where it hits, this is expansion to the upside for volatility. It's got to push the stock up, which is what it did. If it expands to the downside, well, then this band would open up to the downside like that. It would just curve down, and this upper volatility band will curve down too, and this would be expansion to the downside for volatility, and you get that further movement, right? So let's come back over here, and then when you see this right here, what's going to happen is off of that bounce, you see the bounce right here, and it's moving. So what happens from there is now you get low-level consolidation once again off the low, right? So you get 2 white soldiers right here. So you get 2 white soldiers. This could be considered a bullish candle as well, but you get 2 white soldiers right here. Then you get another pause candle, another pause candle, another pause candle. You got a hammer right here. You got one soldier right there. And it's just low-level consolidation. You can see the setup happening once again. The volatility bands are starting to tighten up, right? And the 200 right here is pushing down. So you see right here, this is the 20. Now it's turning red or yellow again. So this is going to be a push down to the downside. And this is most likely going to challenge for the low again, right? So that's it from Double P. That's how we work the business. You can see my position right there in Microsoft, right? The position I took out 1,000%. See that? 1,000% movement on that particular option. That's incredible, right? So am I going to be trading again today? No, I'm done, right? Even though this is something that I should be taking in this configuration right here, I'm going to just made my money for. I may get back into this position. You know what? It's a little bit too expensive. Let me come back over here. Let me look at it. 230. It's already moved 1,000%. That's just crazy. Let me look at this. A lot of good volume on it still. Plus or minus $6.45. So 645. Let's go 650 minus 232. 27. 225. All right. That's the movement in the next 2 days. It's supposed to move plus or minus $6.54. The market makers already said it would move $3.70. It's already moved minus $12, right? That's absolutely insane. $5% move on Microsoft today to the downside, 226.76. It's already moved twice its standard deviation for the day. So, I'm good. I think I'm going to be good. I don't want to risk it. It's not that I don't want to risk it. I'll wait for a good pocket if I come back here and trade. But that's it from Double P. So hope you like this end of the day trading session. I mean, what else can we draw? Let's give you a little bit of a tutorial so that you understand what is going on here. Let's move these candles. Let's make this a little bit bigger. So you've seen volatility. This is all algorithm, right? So I'll draw the algorithm for you. This is algorithms at work. This isn't retail investing. This is algorithms at work. All right? You see how algorithms trade. Because that's all I'm doing. I'm just watching how algorithms trade. All right? I'll open that up so you can see that a little bit better. All right? So there you go. That's algo trading, right? That's volatility. This is volatility. This is the box, right? This is volatility. That's the box. That's what algorithms are doing. So that you see that there, I can clear the drawing set for you. Let's go over to the channel tool. Algorithms trade off of volatility. Algorithms trade off of price action and volume, volatility. Algorithms trade off of direction. Algorithms trade off of slopes. You want to see a slope? You want to see how the algorithms are trading? Let me draw one slope for you. Let me draw the slopes for you so that you see them. How do you draw the slopes? You draw the slopes from the top of the shoulder to the bottom of the heel of the candle, right? So what do I mean by that? That's the top of the shoulder. That's the bottom of the heel, right? There's slope number one. On the upside, once again, you draw it from the boot or the bottom of the candle to the top of the shoulder, right? Same thing. Bottom of the boot, top of the shoulder, right? There's your channel. That's what algorithms trade on. Then what do you see here? This is consolidation. Let me draw consolidation for you. That's consolidation, right? Let me draw another channel for you. There's a channel, right? Do you see the patterns that are forming here with algorithms? Do you see what they're actually doing? Let me draw the volatility. Let me draw the box. Okay, so do you see what's actually happening here? This takes experience, right? You have to know what kind of channels to draw, what kind of slopes to draw, what kind of volatility box to draw, but you clearly see it, right? So this is the support right here. This is the low. This is the second line of defense. This is the first line of defense on a slope. When this line, the second line or the first line, gets broken, right, off of this low movement in this slope, in this channel where the algorithms are trading in, when that outside line, that first line of defense is broken, you see here the algorithms popped out and they started the trade. That's when you get out of the trade, right? That's when I got out of the trade. This is support, and this is support number 2. This is support number 1. Support number 2. This is the outside support level 1, right? When that's broken, that channel is broken, we continue to the downside. This outside channel is broken right here. We're breaking out, right? A horizontal support right there. We stay in the trade, right? Right now you see back and forth choppy action, right? That's what the algorithms are doing. Trading back and forth. There's your range, 227 to 226, right? Very super tight range, but that's what the algorithms are doing. What do we do next? This is horizontal support, right? There's a slope, horizontal support. We wait for either the breakout right here above the volatility box, or we wait for the breakdown. There's no slope here. And there's no channel. There's a horizontal channel if you want to call it a horizontal channel, or we just call it horizontal support. That's where Microsoft is trading in a box. That's why I draw the volatility box, right? So you see exactly what I'm thinking, what I'm seeing, and what I'm doing, right? Am I worrying about all these indicators down here? No. You want to know why I'm not worrying about it? Because I'm looking at the price action, right? The price action does lie, don't get me wrong. But when you combine the price action with the 200, with the channels, with the slope, with the volatility box, this is what I'm looking at. That's the main driver, right? And I'm looking at the candle configuration. That's what I'm looking at first. This stuff right down here, it's 3rd, 4th, and 5th. This is my concern. So if I was to go into this trade, I wouldn't go into it because it's just back and forth action, just get chopped up. I'm going to wait for either a breakout or I'm going to wait for a breakdown, right? So that's it from Double P. That's the tutorial today. Hope you enjoyed it. I'll see you in the next trading session. Let me just clean all this stuff up here because I already know what I'm doing, but I just want to show it, show you what's going on when it comes with Microsoft. So I'm always trading the SPY, as you guys always know, every day. So let's see what's going on with the SPY. Would the SPY have been a good trade today? Most likely. Yeah, it would have been a good trade today. Yeah, the SPY would have been a good trade today as well. Let me draw the volatility box here. And let me see here. Yeah, that would have been a good trade today. They take the SPY as well. Either or, but I figured I'd give you guys a little bit of a break today. 9:45. Dip, channel, dip down again, consolidation. So this would have been right there, reversal, right up there to the high, or touching the high, dip down inside of the box, consolidation right here. Big drop right down there. That was probably some news. That was some news. That was some data that came out. That's a wild spike. Let's see what that range was, because you can see it on the ES. So let's see here. That was a $17 move. It was a $17 range, 10 o'clock. $1.63, that's absolutely insane. So there's some data that came out there. Big spike. More data, more data, more data, more data. Big movement right there. Big negative movement right down there. Let's go over here to the calendar. What came out? 10 o'clock, 10 o'clock. Anything come out at 10 o'clock? Global news. Let's come down to global news. Yeah, manufacturing employment data index 51.4 versus 48.6. Wow, so that's higher. Employment PMI data. Yep. So there's all the news. There's all the news right there. That moved the data. That moved those big wild candle swings. So there you see live. This is what I always tell you. Look at data. Look at global news. Watch what's going on, because you're going to get violent spikes like that. $1.53 range, $1.22. That would have wiped. That would have, if you were on the wrong side of the trade, that would have wiped you out. $1.63. You got to know when data's coming out, right? You look at the news, you look at what's going on to see what's happening in the world, because that'll affect your trade 100%. That's another reason why I kind of took Microsoft today anyways. Yeah, see, low level consolidation. This is all low level consolidation. This will probably trade. Let me open this up so that you see it. And I'll cut the video off from there. This is low level consolidation, back and forth. This will trade like this for probably a while until that band opens up. That band opens up to the downside, or if it's flat, it'll trade in that range, which has been going on now for the last, 10, 15 minutes. And it's going to figure out, and it's right near the low anyway, so it's going to challenge probably for the low again. The 200 is right there. So we'll see what happens, but I'm done with that trade because that can wipe you out if you go in the wrong. I mean, I know what I can do, but I'll just leave it for now. So that being said, that's it from Double P. Hope you enjoyed that live trading tutorial and session. I'll see you in the next trading session. Take care, everybody.